Welcome to TheoTrade. This is Don Kaufman. You are watching the Theo Night video for September 21st, 2016. Well, the Bank of Japan and Janet Yellen and the FOMC are now in our rear view mirror here. The S&Ps are looking to close up the day pretty steadily up here, up about 23 handles. That's 23 points over here. But I'm going to start this evening by looking at very specific levels that we've been discussing for the last couple of weeks, and really specifically this past weekend for the S&Ps, because it looks like we're about to close on one of those levels. First and foremost, coming into the Bank of Japan announcement, the FOMC, it's what we termed a binary event. That basically means it's a coin flip. But what did we actually know about that particular coin flip? Well, we were capable of looking at the S&Ps, and I'm going to go over to the Analyze tab here, and I'm specifically going to bring up the SPX in this case, and go to think back on thinkorswim. And there's a really important case to always be made for understanding, what a binary move happens to be. Again, a binary move, for the most part, you think of it as a coin flip, right? Heads, we rally; tails, we sell off. But more importantly, what the market does to kind of price risk in these particular events. And in this case, again, we've got about 2 minutes left to play in the period, and the SPX specifically, because that's what I brought up here. And again, the data that you're looking at right now inside of the Analyze tab, this data happens to be on Think Back. This is end of day back testing. Now, why am I even bother looking at it? Because I want to show you how important it was, because just the other day I was bringing this up, the expected moves, that the one-day options. Now, this is going back to, again, yesterday's close. The one-day options, they were pricing in a $23 move. Okay? Right here, what do we have? $23.85. And I've been talking a lot lately about efficiency of the marketplace. In essence, I've been talking about I don't know if I want to sell any option premium out there. Even in a slightly elevated volatility event, I don't really want to sell much option premium, because whatever the expected move is denoting, and these expected moves, they're just spot on lately. But the expected move, how is it actually derived? Well, they look at the options in the chain, they average the option prices in the chain together, more specifically the implied volatilities, and they're able to derive what the option market expects price action to be. In this particular case, it says, we're going to move probably about 24 bucks. How ironic. We moved to the penny. Look at this. There's 31 seconds left in the trading day. It says we were going to move 23.79. Oh, I'm sorry. We've only moved 23.42. But game isn't exactly over, is it? So it's critically important to keep this stuff, okay, in the crosshairs on a day-to-day basis. You would have known, well, selling premiums probably not going to be a great idea, all right? Because again, lately the efficiency of the marketplace has been overwhelming. On another front over here, so I talked about very definitive levels, and those levels that I've been discussing happen to be regarding, and again, got trades that are expiring out right now. Some of the levels that I've been talking about are in regards to the S&P futures, okay? For a period of about 7 weeks, the downside, where a huge amount of hedging activity was occurring, was at a level of 2153 in the S&P 500 futures. Okay, that's the E-mini S&P 500 futures. Well, again, what we have right now is a 30-day, just 1 hour chart. Now, I wanted to show you that the binary event that we were coming into, this FOMC announcement, we were right smack in the middle of it. Where did we end up? Okay, wouldn't surprise me to see the S&Ps close smack on 2153 on the button. Things don't get closer than that. Hedging activity right now is what is driving this marketplace. First of all, hedging activity is what drives the expected move that we just saw a moment ago inside of the S&P 500, and it's driving all the trade out there. So here we are, now we sit at this 2153 level. Okay, where do we go from here? Right? And we'll start to denote more levels from this point on. But again, it's just critically important. So S&P's rally, volatility gets knocked out of bed. The VIX all the way back down to the 13 level, the volatility futures back down to 1585. Even the VVIX, okay, drops down to 91. But don't take off your volatility hat just yet. You know, you can come out from under the desk, but don't exactly take off the volatility hat. Again, you know, Janet Yellen's in the rearview mirror along with the Bank of Japan, but there's still some volatility to play out because now, what's the market going to start to grip hold? Okay, so, well, let's take a look out at the SPX option chain. When I say what's the market going to latch onto right now, well, there's nothing really on the horizon. I mean, look, the next 2 days, there's only an $18 expected move between now through Friday expiration. You even go to Monday, all right? I mean, that's what's great, again, about this particular product. It almost like, you know, handicaps, if you will, the risk in the marketplace. It puts a line on the game out there and a $17 move expected in the next 2 days. Now, look further out in time. You know, we start getting into November, a little bit of volatility. But it's almost like the market doesn't recognize or put into perspective some of the risk involving the election. Or maybe moreover, it simply does not care. Nevertheless, you have volatility even into the November expiration cycle sitting at 15%. That's only a 100-point S&P move. And I say only, that is 57 days and a 100-point S&P move. So once again, we're in this, for me, very unusual stance in the marketplace where people, I don't want to sell premium. Again, I made my career in options around selling premium and managing the risk. But right now, okay, the sharper trader out there, they're going to use, all right, Vega neutral strategies, trying not to, you know, get involved in things like volatility, trying to take a little bit of directional bias, if you will. I mean, I'm working on strategies now for things like, for example, in Apple, where we're using these in-out spreads. I mean, the in-out spread's been my go-to strategy since all the way back in March when the volatility kind of collapsed. We went through January, February, saw some good bouts of volatility in the marketplace. Coming into March, volatility collapsed. I went to, you know, the age-old in-out spread, which is, again, if you wanted to see an example of it, if you wanted to get bearish for, you know, here in Apple, it's just buying, for example, like a $2 wide spread for right around a buck. You know, we're buying a $3 wide spread for around $1.50. In the, again, many scenarios, it comes out to the exact same thing over here. But what you want to focus on, okay, right now, again, is more about the right logic for the given market, and what the market's throwing at you right here is volatility that isn't paying out that much. And again, I can't stress to you enough, when I say volatility that isn't paying out that much, you look at the volatility over the next few days and you recognize, hey, if it says the market's likely to move 17 bucks, okay, the irony is the market's actually been moving 17 bucks. And again, I go back to the SPX to show you, here's the final move. The market's now closed 23.35. What did the Analyze tab say? 23.79. So if you sold premium inside of the SPX, what did you make? Absolutely nothing. What'd you lose? Well, probably some transaction costs, but there's no edge on the premium selling side of it right now. Moreover, there isn't much edge to buying the premium either. Again, it's a fairly efficient market. In this particular time, you got to get a little bit, you know, sharper with the trades again you're going to use, offset some of the volatility exposure, and go to that age-old in-out spread. Now, one last thing I want to focus on kind of in the coming days. We're going to go over here to the Market Watch, a tool I use all the time on thinkorswim, and it has a lot to do with advanced decline. Okay, so if you've ever looked at an advanced decline line, this is the S&P 100. They're the stocks for the most part. They matter. Why do they matter? Because this is what really drives the marketplace. There are 94 advancers over here. So one of the things that always stands out to me, okay, in marketplaces is I look at correlation coefficients. For the easiest way to say that is, for the most part, when the market rallies, how many stocks rally with it? When I say that, when the S&P rallies, well, in this case, 94 products rallied with the marketplace. Okay, on a, you know, just put it in percentage terms, great. Basically 94% correlation out there is what we're seeing today. Now, it doesn't necessarily mean it's a one-for-one correlation, but again, the vast amount of the products are going to trade up. The other day, we saw a little bit of sell-side activity. What did we see? The exact opposite. We saw 98 products down in the S&P 100. And what's really important to keep your eyes on is the fact that that correlation, it's really driving all your stocks. So there's not huge decisive moves to be made, like meaning you don't have to go into Amazon and do a tremendous amount of analysis specifically to Amazon. Okay? Amazon is up. Great. So is every other major stock in the NASDAQ, with the exception of Apple. Okay? Oh, Amazon's up. Well, then take a look at Facebook. I mean, Facebook's up, Amazon's up, Google's up. Okay? They're all moving in relative confluence to one another. So at this particular time, back away from trying to be really particular and pick the perfect stock out there and start thinking about some of the levels that we've actually presented in recent trade. Now, the S&P 500, I'm going to zoom out for a second. The S&P 500, as I was saying, is still well off, okay, its all-time highs. Nevertheless, the NASDAQ did crack into all-time new highs today. So whether you want to look at the Qs, whether you want to look at the NASDAQ over there, the NASDAQ for the most part is going to close at an all-time high today. The S&Ps have been slacking a little bit versus the NASDAQ. Okay, the next move to the upside that you'd want to look for inside of, again, the S&Ps, you're right at about 2180. Again, right about 2180. If you want to convert that, if you will, if you look at the S&P futures over here, the next real big upside move, you're probably in the neighborhood of about 2173. Okay, 2173 is a target to the upside. Back to the downside over here, look for 2129. And again, indecision kind of reigns right now. You know, the risk is off the table of the Bank of Japan. The risk is off the table with Yellen. Our market's going to float the next couple of days, or are we still actually going to see a bout of volatility? Again, I believe the rest of this week we're still going to see some decent market action here with futures moving in the overnight session this evening. Thanks everybody for joining us here at TheoTrade. Be back on in the TheoTrade chat room all throughout the course of this week. Have a great evening. Bye-bye.